Business leaders are touting the future of their sectors as the economy begins to bounce back after COVID. Retail, property and construction are being pumped up by the promise of ultra-low interest rates in the coming years. And experts say there's a willingness to maintain elevated spending even as stimulus payments roll off. Paul Zahra, the CEO of the Australian Retailers Association, joins me live. We know that JobKeeper has ended and JobSeeker has come down just a bit. Are you seeing the results of that in spending?
Well, in fact, we've seen such momentum in the market. Retailers are generally actually doing well, and that's carried right through. We thought we would say that we're saying that there's going to be a softening of sales. We've seen some of that, but in fact, some sectors continue to climb, predominantly driven by this elevated household savings rate, of course, and the federal budget cuts that are expected to flow through the economy. So there's still a lot of great things from a macro setting point of view that lends itself well to retail spending.
Yeah, so the tax cuts you're talking about for low and middle income.
That's correct, yes.
Okay, so we see that budget on Tuesday. I don't think there's going to be a lot of surprises, but you never know with this budget probably being the last before the next election. Now, the sector is quite patchy, isn't it? So who's doing badly in retail and who's doing better than expected?
So the retail recovery's been quite strong, but it's been an uneven recovery. So what we've seen is certain cohorts have done it particularly tough. Think travel retail, of course, anything to do with travel because of the international borders being up. Obviously, they're doing particularly poorly. Up to 90% down in their revenue. And also CBD located retailers, predominantly hitting the small business retailers. Melbourne, according to some reports, will take about 10 years to recover. Sydney about 5 years to recover, and Queensland about 3. So we're really concerned about those CBD location retailers as people are choosing to work from home, but equally, again, the international borders are impacting those business locations quite severely.
And how are you factoring this work from home scenario? Do you think it will continue long into the future? Or are you banking on most people going back to work in the CBD?
Well, what COVID has done across the sector is accelerated trends that were already occurring. So the shift to online, but equally this shift from an employee sentiment perspective, wanting to work flexibly. So we do think that people will end up landing in a hybrid model where they'll be working from home on some days, but equally be required to be in the office on other days, generally for meetings, etc. Great for mental health and great for socialising, of course. So the hybrid model will be probably where we're going to land, and retailers and property owners will need to take that into account.
And Paul, what are you looking for in the budget besides these tax cuts?
Well, we're looking for anything that's going to continue with consumer confidence, of course. So anything that drives consumer confidence will be welcomed by retailers. Equally, childcare subsidies to actually get women. We're a really large employer of women in the workforce. So anything that assists families to get women back into working would be great. There is certainly an employment skills shortage occurring because of the borders being up, and we're really looking for anything that's going to create jobs.
Okay, we'll speak to you after that budget and see if you got your wish indeed. Paul Zahra, always a pleasure to talk to you. Thank you.
Thanks, Laura.